Yeah, good day, everyone. Welcome to today's class. Yeah, today we are still going to continue with our double entry principle, and we are going to treat a complex question today, so that we'll be able to understand this principle very well. In order for us to 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 enhance our knowledge on it, because no one can tell. If you see complex question, you should be able to handle them adequately. Now, not to waste our time. The last class we discussed about double entry principle, where I said that for every double entry, for every debit entry, there must be a corresponding credit entry, and vice versa, which means for every credit entry, there must be a corresponding debit entry too, right? Yeah. So, and also I said, if we have pairs where P stand for purchase, E stand for expenses, A stand for asset. If we see all these three and they increase in number or they increase in amount, that means this category of equipment, this category of assets will be debited. If and also we said pairs, right? We have R, which stand for revenue, L, which stand for liability, S, which stand for sales. In any situation where we see these three and they increase in number, right, those three will be credited, right? That's just the basic rules of double entry principle we discussed last week. And today we are going to solve complex questions. Now let's start. Solution to question one. Yeah. Question one says that ABC Limited commenced business with 12 million naira. 12 million naira, right? Of which 8 million naira was paid into the bank. Please, 8 million naira was paid into the bank, and 4 million naira was retained as cash. 4 million naira was retained as cash. Required. Prepare the journal entry. You can see a question like this that say prepare the journal entry. It follows double entry principle, right? So now, based on what we discussed in our last class, I said firstly we have to identify which accounts to prepare. We have to identify which accounts to prepare. First step, let me say step one. Step one, identify the account to be affected. Or the account that the account to record, or to the account to record. Yeah, the account to record. You have to identify the account to record. So what are the accounts that we need to record, right? Number one is commence. If a business commence, that means capital. If a business commence, that means capital. Number one, you can say capital. Number two, yeah, of which cash was paid, of which 8 million was paid into the bank. This is bank. We can say another transaction is bank. Another account is bank account. Let's do like this: bank account, capital account. Another one is what? We have cash. 4 million was retained as cash. We have cash account. So these are the three accounts that needs to be recorded, that our transaction will affect, right? Once you know that, then step two. Which one? Step two. Which one to be debited, and identify the account to be debited credited or credited. Identify the account to be debited or credited. Now, which account do we have to credit and which one do we have to credit? Now, this is where we need our attention, right? We need our attention here. Let's try to listen. Let's go back to the question. The question says that ABC Limited commenced business with 12 million naira. 12 million naira. That means our cash, our capital is what? Is 12 million. You can see our capital is how much? 12 million naira. Of which 8 million naira was paid into the bank. 8 million naira was paid into the bank. That is bank. Sorry. 8 million naira was paid into the bank. Also, 4 million was retained as cash. 4 million was retained as cash. Now, among these stories, which one do we have to debit? Which one do we have to credit? Now, you want to start your business, we say wherever we see capital will be in credit side. Whenever you use a money to start a business, the money you used to start a business or to commence a business is known as capital, and capital will be in credit side of your account. Capital will have a credit balance. Now, out of that 12,000 naira, 8,000 naira was paid into the bank. You now paid 8,000 naira back to your bank account. You, out of that 12,000 naira, 8 million naira out of that 12 million naira, 8 million naira was paid into the bank. That means the bank received it. If you can remember, in our last class I said, debit the receiver and credit the giver. Now, you receive how much? 8 million naira into our bank. And also, you retain cash. Cash of what? 4 million. That means cash is debited. That means we are going to debit our cash because our cash increases. For example, now, if you have 1 million naira in your bank, as cash, maybe at home, for example, and you added this 4 million naira to it will you have a balance of what? 5 million naira. That means it increases. You are going to debit your cash. Please, do you understand? What I'm trying to say here is that you start a business with 12 million naira. That is your capital. It will be credited. Out of that 12 million naira, right, that you want to use to start your business, you sent 8 million naira into the bank, into your bank account. Bank receive it. That is why you debit your bank. Now, you now retained 4 million naira as cash. You now hold 4 million naira like this as cash. That means you debit your cash too. Your cash increases, right? That is why we debit our cash. So here now we are going to say debit. We are going to debit our bank. Debit. We are going to debit our cash, and credit. We are going to credit our capital. So that is that for question number 1, right? Question number 2. Question number 2. ABC Limited purchased office furniture worth 1,500,000 naira. 1,500,000 naira. It pays 600,000. It pays 600,000 immediately. It pays 600,000 immediately, right? It pays 600,000 immediately, right? and agreed to pay the balance after 60 days. Agreed to pay the balance after 60 days. Now, we have to understand this very well. Now, solution. Now, back to our step. You have to identify the account to be record, or to be, we have to identify the accounts we need to record our transactions. Number one, we have to say, okay, office furniture. Office furniture. Office furniture. It pays immediately. That is cash. Cash. Agreed to pay the balance after 60 days. That means you still want to hold the person, or that person want to hold you money, right? You are the one, ABC Limited purchased, right? You are the one that purchased, right? That means you want to pay. You pay half of the payment, and you want to pay the remaining later, right? That means trade payable. After that, we have to know which one to be debited and which one to be credited. Mind you, you purchase an asset, which is office furniture, which will be debited. Office furniture, which will be debited with how much? 1,500,000. 1,500,000, right? Now, it paid 600,000 immediately. That means you paid 600,000 immediately from your cash. From the amount of money you have at hand, you pay 600,000. Let us assume that you have 1 million naira as cash at hand, right? And you paid 600,000 naira out of it. The remaining balance you will have at hand is what? Is 400,000 naira. It reduces your what? Your cash. That is reason why your cash will be credited. With how much? With 600,000 naira. 600,000 naira. Right? Trade payable. You want to pay the person later, not now. How much do you want to pay? Trade payable is a liability. That means you owe someone. You owe some certain set of people. How much? The remaining amount. Right? That is why we credit our trade payable. Credit trade payable. Right? With how much? With 800,000. With 800,000. 600 minus 800, that is 1,500,000. So please, any question on this? Thank you. Let's continue. Question 3. A supplier delivered inventory worth 2,800,000. Worth 2,800,000. Due to damaged items. Inventory worth 300,000 was returned immediately. Now, solution. Now, our first step, let's identify the account to be recorded. We have inventory. We have to record our inventory first. Inventory. What account again? What account do we have to record again after inventory? When you want to make the payment, what do you use to make payments? Cash. Let's say you use cash to make the payment for the goods. A supplier delivered, yes. So you use they delivered the goods to you, and you paid, right? When you pay with, let's say you pay with cash, and you now return Due to damaged items, you returned inventory worth of how much? Worth of 300,000. Worth of 300,000. Right? Now, in this case, we can do this in two ways. We can have double transactions. We can have two different accounts to prepare, right? When you purchase the goods and when you return the goods. When you purchase the goods, when you returned the goods. Now, let's start with this. You purchase the goods, right? You purchase inventory, goods. Inventory means goods. As what price? 2,800,000. Let's do like this: 2,800,000. We have 2,800,000, which will be debited. Now, you pay with what? You pay with cash. You pay how much again? 2,800,000. Now, due to damage, right? Due to damaged items, you now returned how much? 300,000 naira. After this transaction now, after this one has passed, it has passed, and you now returned how much? You returned 300,000 naira, right? When you return 300,000 naira, two things might happen. It's either they refund you. Do you understand? It's either they refund you immediately or they will refund you later. It's either, we have two scenarios here. It's either they refund you now or they refund you later. If they refund you now, that means you receive cash, which means your cash will be debited and your inventory will be credited because your inventory reduces, right? And your cash increases. You understand what I'm saying? Let's, for example, now you paid 2,800,000 naira with cash. They now gave you 300,000 naira back, right? That means in that account you have 300,000 naira, not zero again. So in that inventory, not that you have 2,800,000 naira goods again. You now have 2,500,000. Do you guys? So please, this is what I'm trying to say. Debit again. We are going to debit our cash. Cash with how much? With 300,000 naira. 300,000 naira. And credit. And credit our what? Our inventory. Our inventory with how much? With 300,000 naira. With 300,000 naira. That's what I'm trying to say. So if you now check now in a normal account, if you prepare your account now, let us mean that we prepare inventory account. This will be debited, this will be credited, and you have a balance of 2,500,000 naira. That is exactly the amount of goods you have at hand now. If you prepare cash account now, you will credit this one, 2,800,000 naira. You will now debit how much? 300,000 naira. That means the actual amount of money you paid for is 2,500,000 naira. This minus this will give you 2,500,000 naira. Do you understand? So that's all for the third questions. We still have more questions to go. So because of time, I hope we should stop here. So if you have any other question, or you are solving a question and you don't understand, try to share the question with me so that I can solve it, and we can have a full understanding of double entry principle. And also, please don't forget to like, share, comment, and refer this channel to your loved ones that are preparing to write one exam or the other pertaining to accounting. And if you have any undergraduate student that is studying accounting or that's preparing to write ICAN in in any stage. This is a basic accounting principles that all the accounting students should understand, whether you are in secondary school or not. Thank you very much. And don't forget to follow this channel in Facebook, in our YouTube, for us to be able to have access to our numerous class, our numerous classes for further knowledge and for further understanding of varieties of topics that we'll be bringing on. Thank you very much.